My sense is that we could have one more move down this final E wave, and that could take us anywhere between 2650 and 2630. But after that concludes, we will then go back into our impulse phase or motive phase, and that will take gold higher as we move into the second quarter and beyond this year.
Gold prices recently climbed to their highest levels in approximately 4 weeks, reaching $2,700 per ounce. This surge reflects growing concerns over U.S. economic policies and recent volatility in equity markets, which have heightened demand for gold as a safe haven asset. Prices also hit record highs in 2025, underscoring the metal's appeal amid ongoing economic uncertainty. Gary Wagner highlights that gold's next move depends on key support levels, Elliott Wave patterns, and the current triangular consolidation. He noted that gold might experience one final leg down, a concluding E-wave, potentially bringing prices to the $2,630 to $2,650 range. Following this, Wagner anticipates a bullish breakout, likely beginning in the second quarter and continuing beyond. Goldman Sachs has revised its gold forecast, pushing back the $3,000 per ounce target from this year to mid-2026. This change is driven by expectations that the Federal Reserve will adopt a more gradual approach to interest rate cuts. Inflation is already shaping 2025, with the latest Producer Price Index report showing a smaller than expected rise of 2% in December. While this may seem like positive news at first glance, here's where it gets interesting. Energy costs surged, with gasoline prices climbing nearly 10%. However, core inflation, excluding food and energy, remained flat. Gary Wagner highlighted the market's recent behavior, particularly its reaction to the January jobs report. He noted that despite stronger than expected job growth, which would typically apply downward pressure on gold prices, gold initially rose before retreating into a compression triangle. So, what does this mean for gold and your investments? Could this signal a temporary dip in gold before a move higher, or is the $3,000 target now off the table? Let's dive into the charts with Gary Wagner, editor of goldforecast.com.
We had hit the all-time record high back in October, and we had this tremendous move down from 2,800 to below 2,600. When we talked last, we were looking at this move back up, what I labeled as a B wave, and I talked about the good and the bad. And in terms of the good and the bad, what I mean is I still believe that we are in a correction, although we are in the final stages of that correction. And the exciting part is once the correction concludes, and I don't see that taking that long to unfold. In other words, I believe it'll happen the first or second month of this year, March at the latest. Then we restart the clock in terms of our Elliott Wave count. And that means we will, according to Elliott Wave theory, take out $2,800 minimum by the conclusion of what we're labeling as the next motive or impulse cycle. In terms of what we witnessed recently that I found interesting is if you see this green candle that I'm pointing to, Friday, January 10th, and that's when the jobs report came out. And they were anticipating a fairly tepid report, 160,000 new jobs added to payroll, and it came in well above expectations. And that would typically be bearish for gold. But what we saw was gold actually moved up and moved above this upper level resistance line. I think what we saw was a delayed or knee-jerk reaction to the jobs report because yesterday we had that double-digit sell-off in which gold lost almost $40. And so now it's back within this compression triangle. My sense is that we could have one more move down this final E wave, and that could take us anywhere between 2,650 and 2,630. But after that concludes, we will then go back into our impulse phase or motive phase, and that will take gold higher as we move into the the second quarter and beyond this year. I would expect this correction to be shallower than the previous one. And the way that we want to look at it, as a market technician, we've got a series of highs. We have lower highs, 2,800 here, 2,750 here, and then 2,714. We'll round it down to 27. So we've got a market that's got a series of lower highs, but we also have higher lows, 2,570 here, 2,602 here. And so what we want to do to confirm that the correction is over, we want to look at these price points, meaning 2,575, 2,600 as major support. If we look at this lower level support line that's just created from drawing a line from a series of lows here and carrying it forward, we should get some sort of confirmation if gold, as I believe it could, continues to sell off. Then we want to see either a candlestick pattern, or we want to see how it reacts, for example, here at 2620. And then we have a series of lows here at about 2640. So if it continues to move down, we want to see that V or pivot from bullish to bearish. And typically what you look for is a color change in the case of a correction from red to green. If we convert this to our what's called a Japanese average, it's a little easier to read, or Japanese average. You can see that as gold had this one leg of the major correction.
As Trump's tariff strategy reshapes the economic landscape, gold has unexpectedly emerged as a key beneficiary. His proposed tariff policies, which carry significant inflationary implications, have driven a surge in gold prices as investors turn to the metal as a stable alternative to the dollar. The potential implementation of these tariffs has sent ripples through various sectors of the economy, triggering heightened volatility in the precious metals market. President Trump made numerous promises regarding his future economic policies during his campaign, setting the stage for considerable market shifts. Gary Wagner expressed caution about making definitive predictions, emphasizing that the impact of potential tariffs would largely hinge on how swiftly and extensively Trump implements them, should he return to office. While the situation remains uncertain, Wagner noted that any significant moves to impose tariffs could have far-reaching consequences, including heightened inflation, shifts in trade dynamics, and notable effects on the precious metals market. Now, let's redirect our attention to a video.
What I can say is it's a huge unknown. We have seen, for not the most part, but on many occasions, Trump make a pledge that he's going to do something, and then he does try to accomplish that. And if in fact what we see is that he implements tariffs across the board, that could create trade wars, as you said, but huge inflationary pressures, because as tariffs are added to the cost of goods, that takes the cost of goods up, and that is intrinsically the definition of inflation, paying more for the same item as you did previously. Now, when it comes to the precious metals, as you pointed out, they have been, for the most part, exempt. We'll have to see how that unfolds. If that's the case, that throws yet another possibility and another potential to move the metals higher and create those bullish tailwinds. The fact of the matter is, if our inventories are picking up in terms of physical in the United States, initially, supply and demand would dictate that that could pressure them lower because our stockpiles, our inventory is greater. But inevitably, if they have to add a surcharge or a tariff as they import precious metals, that would have profound implications on what we could see in the price. One thing it will do is create extreme volatility, regardless of where the metals go from day to day. But they certainly could have a genuine impact overall on the price of gold, silver, platinum, to a smaller extent, palladium this year until President-elect Trump becomes the next president and what his first steps are in terms of his new administration. We do recall from the last election when he was president, he was fairly quick to immediately implement certain things, certain pledges he had made. And I wouldn't expect him to be different now than he was then. If he is quick to begin to implement these things, specifically tariffs, because the budget deficit in terms of growth we would see throughout the year and throughout his term, not necessarily right at the beginning. But the tariffs would have an immediate and profound impact on the cost of goods. If he does make good on his pledge to be heavy-handed with tariffs, we could see a major uptick in inflation. We know what higher inflation does for gold. And until it unfolds, I don't really want to make comments because it's an unknown.
Yeah.
But he has implemented tariffs in the past. They, of course, in many occasions were repealed when Biden came in. But if he reinstitutes and has a heavy hand with tariffs, we could see inflationary pressures really move up and move up quickly.
Due to the uncertain future of the U.S. dollar, many investors are seeking refuge in gold as a reliable haven against impending inflation. Unlike the dollar, gold's value is not significantly influenced by the Federal Reserve's monetary policies or political decisions. Over the past 2 decades, persistent inflation-driven instability in the dollar's value has contributed to a substantial rise in gold prices. Since December 2000, gold's value has skyrocketed by over 500%, reflecting its enduring appeal as a store of wealth. With increasing economic uncertainty, could gold's historical highs be surpassed shortly? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.